Hi, I'm Peter Rose, founder of Longwood Currency Trading. I'm here with my dog, Bo, who says he wants to go for a walk in the woods. So let's take him for a walk in the woods. Come on, Bo. So how not to lose $4,000 trading Forex, which is what I did about a week ago. I've been on a losing streak. I've mentioned that before. I think it was last month. I'm basically 7 losses in a row. I had one day I won $188, and the rest of the time I lost $14,000. The size was high. The markets are radically not different, but there's economic situations going on in the world at this particular time. This is the end of August of 2024. So if you're watching this now, then you know what's going on. If you're not watching it now, it's okay. It doesn't matter because it's all the same anyway. There's always crisis going on in some way or another. However, this particular time, many of the central banks are changing their interest rate policy. Some have already started on that change by dropping interest rates because of the high inflation that we've had. Interest rates have gone considerably higher. In the United States today, we're looking at September, just a couple of weeks from now, with our first drop in, I don't know, 14 months or something like that, 2 years. Interest rates currently at 7 and change, and we're hoping to get a quarter point to maybe a half a point decline. Well, the central bank policy radically affects what the value of the dollar, for example, is, because I trade dollar major pairs. And so when the interest rates are in motion, particularly going from a rising mode over about a 14-month period of time, going from basically 0% to over 7%, and now you're going to start the retracement of that. This is a big deal. This is a major deal that's going to be happening. I knew this was coming. I knew it was happening, but the currency market is like a big oil tanker, and it's charging along. And just because the captain says, "Okay, change course, turn around," that oil tanker isn't going to turn around right away. It's going to take a while to do that. And as it's turning, it's still exhibiting momentum from a sideways standpoint, momentum in the same direction that it was in before. And so you can continue to trade in that direction on the lower time frames. I'm a day trader, so that's what I do. The problem is when large institutional traders all of a sudden change their view of the market and how much they're going to be able to purchase goods in order to produce their products so they can sell their products. This change in the interest rate policy, they will all of a sudden go, "Oh shit, man, I've got $2 billion worth of stuff I've got to order. I got to do this now." And so they go to the institutional market and they say, "Hey, go, guys, I got $2 billion here. I got to get this done, and I got to get it done now." And all of a sudden you get this huge spike in the opposite direction, and so you can get caught. So I got caught pretty good at the beginning of the month, and caught some positive days on the way down, and then got caught again, $4,000 last week. And I just said, okay, let's just sit down and let's see what's going to happen here. I made a determination this week that I was going to change my view, not my rules or anything. I'm going to change my view into what it will be as opposed to where it is right now. The famous hockey player Wayne Gretzky said, "I skate to where the puck is going to be, not where it's been." And now's the time to take a different view of the market and then work on my new view of that. Begin to map my rules into that new view. It's very difficult when you're in a major transition like this. I mean, if you're a swing trader, this isn't a big deal. You just go, "Oh, okay, we're doing the swing and I'm going to play it that way." You can't do that in a major directional change because you have to change your bias. You have to change the way that you look at the market. you have to pay a little bit more critical attention to the purchasing managers index, for example. What are the big producers doing? Are they changing their minds right now? And every now and then you'll get this boom that'll go in that direction. And so not all of them are changing, because again, they're like oil tankers, and they don't just go, oh, geez, we're running a $7 or $8 billion business here, and we're trying to bring on a whole bunch of products, and we got to get through the inventory that we currently have before we can even afford to buy the next thing, before our suppliers will grant us the build our shit or buy supplies or whatever it is that we have to spend the money on. I'm trying to be careful walking around here, because as you can see, we are in the woods. We're not on a trail, and so I got to watch out here. I'm still recovering from my left hip flexor muscle pull, which is a bitch to have, because every time you breathe or move your leg, you get a swat down from that. So how do I not lose $4,000? I just lost the $4,000 last week. So what happened today? I lost $243 today. That's a big difference between the 4,000. And I'm trading the same size, but I only lost $243 because I've changed my view. I went into the market and probed it a little bit. I got out of a position. I lost $72 there. I got back in, switched my direction, lost a little bit of money there, got out, went back in, won a little bit, because I picked a little bop in the market. I'm down on the 5-minute time frame. I'm only looking to grab 3-5 pips. I'm not looking for a 20 pip run here, because I'm unsure of the long-term bias. It takes a long time to swing that boat, right? So I don't want to be taking huge positions that I'm going to hold over even a 10 or 20 pip wish for a profit target, because the uncertainty is so high. So the idea is just to pick away 3 or 4 or 5 pips. In my staging process, I know what my win-to-loss ratio is. I know what the average winning value of my pip count is when I win. So I'm not really concerned about the $243 loss, because that's my in my trading plan at the size bank that I'm probing this market at. $243 is just a small amount of money. The less number of pips that you're going to try for, the smaller the dollar value that you want to trade, because you're only going for a few pips. So if the price turns and starts to go against you, you got to be willing to get out right away. So if you're dropping a 6 lot in there, and each pip has cost you $60, and you're thinking, geez, I'm going to take an 8 pip negative position here, you're $480 in the hole. Well, how much do you expect to make if you're going to pick away at the market at 3 to 5 pips at a time, and you're going to be 60-40 trader? What are you going to do? What are you going to do? How does the math work out? So you have to look at the math as to what's mathematically possible, and then you have to look at what you call the drag coefficient. You call it resistance or whatever, but there's a drag coefficient that I talk about in the currency market, or any trading market really, that creates the stubbornness of the price to move where you want it to move. And so if you are going to be probing the market constantly, you don't want to be probing and taking a 6 lot hit. You're going to go in there with a couple of lots or 1 lot. You're going to probe around. You're going to lose. You're going to test that market. When you do get a winner to go, does it follow the rule? Does it have enough momentum to finally break out of the pack, or is it just going to sit there and vibrate for a while? Right now it's about 1:30 in the afternoon Eastern Time, United States. I just closed that trade probably an hour or so ago. Sometimes in the major pair that I'm trading, we'll get an afternoon push, and then it'll flatline for a while, and then maybe when the Asian market comes online about 8 o'clock my time, you might get some activity. I'm going to be watching a movie tonight at 8 o'clock. I am not going to be trading currencies. I don't care. I'm done for the day. It just was not going anywhere. It was just causing a lot of grief. Yep, there's the bow dog. I have to keep calling at him. Sue's not here. She's off with granddaughter, and they're out searching for minerals and rocks up in a mine. It's a girls' day away from the house, so I have bow dog duty. I gotta feed them, I gotta walk them, and so we're just kind of picking away at it. I'm hobbling along here with my hip flexor thing, and so I'm reducing the size of my steps. I'm reducing the time that it's taking me to walk him, and I'm not letting him get very far away from me, because I don't want to have to run after him because he's chasing the mailman or something like that. So I'm doing the same thing in trading. Unfortunately, I didn't realize this magnitude of this change until today. I spent 4 hours going back over my trading logs for the entire year, matching them up with what happened last year. I took a huge loss last year, but matching those trading, the transactions and the closed day trades, daily results, looking at win-to-loss ratio, looking at average win value, looking at average pips gained, average pips lost. It's just going through the whole thing, and a pattern has started to appear. Sometimes you can't see the pattern right away, just like that oil tanker that's changing course. You don't really see this big sharp arc like you would on a speedboat. You just see this gradual change. If you're on the boat, you probably don't even see the change, because it's going to happen over a long period of time. But if you were to take a series of pictures and look at those pictures over an hour or so, you'd see that there's this arc that's continuing on, and you'd say, oh, the boat's turning. Right now you can't tell that the boat's turning. Even right now, despite what we're saying, we don't know if that market view is changing to the extent that I think that it's going to change. Well, I don't know shit about what the market is going to do, or or when it's going to do it. And it's very difficult here because the swings are relatively easy to determine, or retracements. I don't like it. I don't do swing trading because I think that's just crazy. You're trying to catch a falling knife if you're going one way, and the other way it's all hopes and dreams. So I just don't think that catching tops and bottoms is really a very productive way to do things. Well, you say, well, Peter, you don't get these trends very often, so you gotta watch these swings and take advantage of them when they come. Yeah. I hear all that. I've done simulation analysis. I've done all the math on it. Good luck. So how not to lose $4,000? Lose $243 instead. And how do you do that? You simply need to be aware of the market, that it's changing, and it doesn't have to be a major change. It's just that, look, things are not working out, that you lost that much money. That was not a normal size loss for me, 4,000. That was an exacerbated loss based on the size of the position that I was carrying at that particular time. It was large, way larger than what you would expect as a really solid percentage win, as opposed to what you would expect as, oh geez, I took a bad hit today. I took a really bad hit today. This was a really bad hit. Why did that happen? And that's why I look back in the logs, the transaction register, and I see, oh, there's this pattern of something that I'm doing. Why am I doing that pattern? Oh, it's because, oh, but I'm not certain about that. I'm not sure that that's happening. So I have to change my view and say, there is no pattern. There is no market bias right now. The market is in flux, and so therefore I have to drop my position size drastically low, and I have to trade small, and I have to trade a lot. Almost scalping. Until there's a definitive enough trend, or at least a bias change in that trend, to warrant doing profit targets of 20 or 30 pips. My average winning pips is far less than the 20 to 30 pip profit targets that I set. I set those 20 and 30 pip profit targets, distances, because I don't want to get in too soon to a position, and I realize that the profit target is a zone and not a line, okay? And so I'm going to be missing the first third of the trade, and I'm going to lose the top quarter. And so I have to be really careful about the number of pips that I have the expectation of gaining, and I've always done that. So when I'm trading, I might successfully, out of that average 25 pip wish, I might be getting 13 of those. But under the current conditions, that value is more like 5 to 8. I've got the math. I've got the data that I have from the trading that I've done before. That's why I can quote this stuff. Are these values valid for you? Absolutely not. Can you compare what you're doing with what I'm doing? Absolutely not. Because we have different views. The only way that I'm able to help somebody is if I can get on the, get involved in a coursework with them or talk to them and say, look, let's see what you're doing. Let's see what I'm doing. Why did you do what you're doing? And this is why I did what I'm doing. You have to have somebody there that you can run your ideas by. You can't just read a book or take a course, get a PDF file, and watch 15 videos, because it just isn't going to be valid. It really isn't. You can't learn anything that way because you're not able to ask questions in real time. Hey, Bo, come on, we're going to go down this way. So, again, for the third and last time, how do you not lose $4,000 trading currencies? Lose just $243 instead, by recognizing the conditions in which your methodology supposedly is encapsulating or holding, and seeing how those conditions in the rules are really indicating, based on the information that's coming into the rule. A rule takes in information and it spits out an answer, okay? So when that rule is taking in information, if you're feeding it the incorrect information, oh, this thing is in a really solid upward trend, and it's not, you're in a swing period or a reversal or something, you're going to get crushed because you're putting garbage into the rule. It doesn't make the rule bad. It makes your input to that rule bad. So you have to change your view of that market so that the information that you're inputting into that rule is valid. Not, oh, I think, well, because it's Tuesday, this is what should be happening, because the Fed is going to come out later today and they're going to drop interest rates by a quarter of a point, half a point, 22 points. Who knows and who cares? What's going on right now? And how do we make sure that the information that we're feeding to the rule is valid? The rule itself is nothing. It's a blueprint. You have to actually build the thing. You have to put data into it in order for the answer to come out. If you put crappy information into your rule, you get crappy data out. I put crappy information into my rule set last week, and I took a $4,000 hit because I fell in love with the position. I was so right, and everything was going just great until it didn't. It spiked out and I was gone. Boom. I should have got out when it was a $1,000 loss. I didn't. I held it. It went to 2, and then it spiked and jumped to 4, and I hit the button and got out. That's how that happened. So in order not to lose $4,000, just lose a couple of hundred and come back the next day to fight it through again. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.